Hello friends, this is Raj Sastry from Raj Option Trading. Today is November 6, 2022. Hope you're all doing well. In today's segment, we'll take a look at how to use option strategies to consistently grow your account. So these are no stress option strategies. You can grow your account consistently whether you have a small account or large account. So my favorite strategy is to use indices like SPX. As you can see here, we got SPX here. SPX is S&P 500 index, and it's a very good vehicle for you to consistently make money. We will also use one or two more ETFs and look at the strategy and go from there. Look, I'm in Thinkorswim on demand. Just to prove the point here, I'm on October 3rd, 2022, just to make sure you got 1 month to play around with this strategy. So with that, let's get started and look at this strategy to consistently make money and grow your account regardless of market, whether it's going up or down. So with that, let's jump in and get started. Look, I will go into trade tab here and bring up SPX. As many of you know, SPX is very liquid. It's S&P 500 index, and typically with this strategy, I want to go 46 days out. Look, I'm in a option chain here, 46 days out from October 3rd, and we are looking at 18th of November. It's a monthly expiration cycle, as you can see here. That's good enough for us. And with this strategy, what we have to do is we have to go all the way to Delta 10 option. Look, you can see the Delta right here. Delta is right here, and we'll go into Delta 10. As you go all the way down here into Delta 10, look, we keep going. Right here we got Delta 10. We can go around, we don't need to be exactly Delta 10. We can be around Delta 10 and make sure to look at a option chain with nice and high open interest. Look, we got one right here with nice and high open interest at 4,000 here. Look, we got 28,000 open interest here. That's good enough. And Delta 13 means if you buy this option, it's as good as you own 13% of SPX here. That's good enough. And what we'll do is we'll basically sell a put spread here, call spread right here, and go from there. So I typically like to go at least a $10 wide spread. If your account size is a little bit lower, you can go and do a $5 wide spread and go from there. Look, I will go with the $10 wide spread here, and I will save. I will basically sell for 4,000 here and buy 4,010. Look, it's very simple. Just go here and do it. I'm getting a credit of $130 here. As long as SPX stays below 4,000, I can collect this entire money here. I will go and confirm and send here. It's my $10 wide spread. As I confirm and send here, look, as you can see here, we got here selling SPX 18th of November, 4,10 call. I'm bringing in $130, as you can see here, and break even point is 4,000. As long as SPX stays below 4,001, we can keep this money. Max profit is $130 and max loss is 870, and buying power effect is 870, as you can see here. So with this, I'm comfortable with this. I will go confirm and send it. All right, so we got it filled, very easy. But if your account size is less, what you can do is you could go here and you could do a $5 wide spread here, and you are bringing a little bit less money. But if your account size is less, I recommend go with the $5 wide spread. Look, you're bringing in nice money here, 65 cents. You can confirm and send. Right now, look, you're basically selling a vertical spread in SPX. 4,000, 4,005, and your break even is as long as SPX stays below 4,000, you get to keep that money, and your max profit is 65, max loss is 435. That's good enough for me. I will basically confirm and send this. There we go. We got here two spreads going on. As long as SPX stays below 4,000, we keep our money. All right, and let's go one more thing here. Let's as each and every day passes by, our profit potentially increases, and we get to keep maximum money here, which is the profit or premium that we collected. What I like to do is I will also marry this with selling a put all the way to around delta 10 here. Look, we got delta here, right here, and I would go all the way around delta 10 here and follow the same strategy. Make sure you got a nice and high open interest. Look, we got delta 10 and 12 around here. Look around this here, 3200. Look at the open position here, nice and high open position. I like it here. What I will do is I'll sell a credit spread right here, 3200 and 3190, $10 wide credit spread. I will go and sell it and go from there. Look, go here, sell, and create vertical spread here, 3200. I'm selling. I'll buy 3190, $10 wide. Look, I'm bringing in $100. That's good enough. And let's confirm and send this one here. There we go. So look, we are basically selling a vertical spread, a credit spread, or a put spread as you call it, $10 wide. As long as price stays above 3199, we get to keep our money, which is $100, and our max loss is 900. And look, our buying power effect is 0. This is the best way here. Look, because we already sold a call spread on the other side, put spread, buying power effect is 0. You can basically get it without impacting your buying power at all. That's one of the good thing here. Let's confirm and send this here. And if your account size is less, you could go with the $5 wide spread here. I will say just go here and just sell a $5 wide spread here. Look, I will say 3200 and 3195, just a $5 wide spread. I'm collecting 960 cents here. If your account size is small, you could do this here. Look, you're bringing in $55 here. As long as SPX stays below 3199, you get to keep your 55 cents. So with that, let's confirm and send this here and go from there. Look, it's still trying to think through here. Let's give it a few more minutes. And generally, if you look at the chart for SPX here, look, SPX came down drastically. As you can see here, it's showing some profit potential or trying to go slightly higher. By looking at the chart, I will also play a directional play in SPX here, so I get to make some money. My directional play at this time, by looking at the chart, is SPX might go higher. It has a nice support level, as you can see here. What I will do is I will also go in here and go to the at the money strike level here. Look, it's a 3646, as you can see here. I will go around 3646, go all the way down here, 3646, 3640, that's good enough, 3645. What I will do is, because market is sold off here, I would go right here. I would even go one level high, 3650, because nice and high open interest here. I will buy a $10 wide call spread here. Look, I'll go here vertical, 3650, 3660, $10 wide spread here. I'm paying $5.65 here. Right now it increased here, $6.55. That's good enough here. I will go and buy it here, and remaining portion is my profit potential. Look, I'm spending here 555 to make 445, almost doubling, not quite, my money here. I will confirm and send this here and go from there. In the meantime, if your account size is small here, you could do a $5 wide spread here. You could do 3650 and 3655, and you could basically buy a $5 wide spread here. Look, 3650, and 3655. I'm paying 270. Remaining portion of $5 widespread, which is 175. That's my profit potential. I will confirm and send this here. This is for my directional play here. All right, let's go back and go into here and see what's going on. Look, one of our credit spread here is looks like it's 65.55. I will just lower it slightly and see if it fills. I will make it 50. Sometimes these credit spreads are a little difficult to fill. I'll make it a little smaller here and go from there. Look, it's not filling. I will will not worry too much about it. For now, I'll go ahead and cancel it. Looks like it's not filling. Sometimes, when you do on demand, that happens. I'll cancel this. Now what we'll do is we'll fast forward a month from now. We're in October 3rd. I will go all the way to November and see how this strategy pans out. I'll go into November 4th here. I will go towards market closing around, say, 3:30, which is 15:30 or so. All right, around market closing time here on November 4th, and go from there. All right, let's go here. Let's buffering. Let's give it a couple of minutes here for it to buffer and see how this strategy pans out. When it's doing it, this is one of my favorite strategies, mainly because market is very volatile. Market goes up and down. By selling a call spread at the top and put spread at the bottom, and also going with the directional way, like we have bought some debit spread here, that will also do very well. So with that, let's jump in here, see what's going on. Look, we got our we are now on November 4th, as you can see here, and we got our SPX strategies. Look, first strategy here, we have a call spread here. Look, we got a vertical spread going on here. On this vertical spread, I think we made $30 here. Not too much, but it's good enough. You could even, if you want, you can close this here. It's a $5 wide spread. Our max profit was $70. We already made $40. You could just go ahead and close it, or it has still 14 more days. You could even keep it. It's a low stress strategy here. You don't need to lose sleep at night. Very low stress strategy. For this illustration, I will go and close this out here and take $30 profit, as you can see here. All right, let's confirm and send. All right, so we got $30 profit. Very low strategy. I do this all the time on SPX, which is very liquid. Next, we got our put spread here. It's a $10 wide put spread. Look, we basically sold it for $100. Now it's we made $95. I can close this. We made very good money in this. You could just close it and pocket $95 and go from there. Look, that's done. All right, so now we got, I think, one more or two more. Let's go here. Look, we got two more here. We got the call spread that we sold in this, let's see here, 3650 we bought, and 3655 call spread we sold. It's a $10 wide debit spread here. We paid $280, and look, it's at 365. We made $90 on our directional play here. That's why, when the market is low here, you can do these type of directional play in SPX, and we can close this. We made some good money on this one also. We can close this out. All right, so we got one more going on here. Let's quickly go here. I think we also sold a $10 wide spread here. Let's go to that. Look, we got a $10 wide spread here. Let's see what's going on. So we got a single call, and we got 3660 call here, 3660 call that we sold. We can close this one here. Looks like one of our spread got a little bit mixed up here. Let's look at this spread here. We can close this one. Looks like we got one more stuck over here. Okay, these are all closed. That's good. Okay, we got we got one more stuck here with the $65 profit here. I can go ahead and close this thing out here and go from there. Look, we got $65 here. I think we did not do this. This must be stuck. We only did the spreads here. This is a single. I think we closed all our spreads. I think we made a good profit here in these trades. So in a nutshell, what we're doing is really we are taking advantage of the increased volatility, and we are basically selling a call spread all the way delta, say around delta 10 or so, by looking at nice and high open interest. So we went all the way to delta 10 and we sold it, and at the same time we sold a put spread also all the way around delta 10 where there is a nice and high open interest. By doing this, what we're doing is we are really doing an iron condor. We are selling iron condor, but we are not doing it blindly. We are looking at the delta positions itself. We are selling around delta 10 or so, where you find a nice and high open interest. Always look for a high open interest. It's okay if you go around delta 10 to delta 15, where you find a nice and high open interest. Look, what we did is we looked at the delta here. Look, we got delta. If I go all the way down here, we looked at the high delta, and we got some high delta here also here around delta around delta 10 or so. You can find some high open interest here. We got few of them here. You can keep doing it on a weekly basis consistently. You don't need to always look at the monthly expiration cycle. You can go also look at the weekly expiration cycle and consistently sell at around delta 10 to 15, a call spread as well as a put spread. Very low stress strategy, and you can keep on improving your account. I had been doing it consistently, and whenever you have some directional bias like what we saw, you can always buy a debit spread at around the money or a little bit out of the money with not paying too much money here, and play some directional also. So with that, thank you very much. Happy investing and trading. Please subscribe.